Well, our next guest runs one of Asia's biggest oil and gas services companies, Sapura Petroleum, eyeing expansion opportunities, especially in the Americas, West Africa and the Middle East, recently launching its first support vessel. This is just off Brazil. It was just ahead of schedule. Well, joining us exclusively from Kuala Lumpur is the company's president and Group CEO, Shahril Shamsuddin. Shahril, great to see you. Well, you know, what is the expansion looking like right now? How much of it is organic? How much of it is inorganic?
Good morning, Rashad. We have a very good balance of organic and inorganic growth. We've been building our capabilities sequentially over the past decade in the areas that you've seen us do acquisitions in. For example, drilling we've been doing for over a decade, and we did the acquisition of the Seadrill business into our company. This has strengthened our EBITDA capabilities and also expanded our market. So it's a good balance between homegrown capabilities and also capabilities that we acquired. And the same again for the upstream business we just acquired.
Yes, of course, you just acquired the Newfield Malaysian operations, didn't you? Now, this brings me on to another point, which is a lot of US companies are looking at the domestic market there, looking at shale and the opportunities that it presents, and divesting themselves of upstream operations in other parts of the world. Now, Newfield would be one of them. Are you looking at some of those divestments themselves, and if so, which ones?
I think we're always looking at opportunities to build a regional independent oil company, but it has to be something that is substantial and also which allows us to operate. We won't be going to opportunities where we'll just sit in as an investor. So at the moment we are bidding of some assets that are being sold. Go ahead. Sorry?
Sorry. Please, Shahril, go on, please.
Yeah. At the moment we are bidding for some assets in Vietnam which Petronas will be letting go. And also some opportunities in China, which Newfield China is also offering on the market.
So you're quite busy in that space because there have been quite a few reports about what happens with some of the Murphy oil. Let's have a look at Murphy oil because that's one of the names being touted around.
No, we're not looking at Murphy because it's just an investment position.
Okay, well then there's also a bid on Rock, which is another one. I mean, you're really at the headlines, it seems.
No, we're not looking at Rock for sure. I think predominantly we are an oil service company. A bulk of our assets are used to capture opportunities across the value chain and across the life cycle of an oil field. For example, we start with the E&P, we can do pipeline facilities, installation, we can do rejuvenation, and we can also do decommissioning, and of course also drilling. More than 90% of our revenues right now are coming from oil service and remain strong as an oil service company.
Yeah, absolutely, Shahril, I know that. The thing is, with oil prices, where oil prices are right now, the question remains that many of the unprofitable fields are now profitable and economically viable, and that must set up a lot of opportunities for you. How do you make the most of that?
I think it's important to see that there's always volatility in oil prices. We need to see that what the long-term oil price would be, and always be conservative and not be too eager to be looking at opportunities when oil prices are up because everything becomes viable. I think we need to have a more conservative view on oil prices when we're doing acquisitions.
Well, absolutely. And so you must take a conservative view on the oil price, and of course, as you mentioned, that not look at the volatility. But we're in maybe an era now of oil prices being above 90. I remember talking to people 10 years ago saying that anything over 70 releases a whole series of wells which wouldn't have been able to be drilled.
Mm-hmm. That's why we need to be conservative. Fields are getting more difficult and smaller, and we need to be coming up with new techniques and capabilities in order to make these projects viable. And that's one of the reasons why we've configured our company in the way that we have, where we are able to capture the value across the value chain and aggregate the IRR in order to make these more difficult fields viable and profitable.
Well, the other thing is that, you know, when we look at your balance sheet, you've got something like 27 billion ringgit there in terms of orders, your current order book. You said that that should last for 4 years. Are you confident you can maintain that?
I think it's important for us to continue to bring in at least 10 billion ringgit or about 3 billion US of work every year to replenish what work that we do during the year. For example, you know, we will execute probably around 7 to 8 billion this year, so we need to go out there and win the same amount in order to maintain that order book and always give a 4-year visibility on our earnings and our revenues. And also at the same time growth in our EPS.
Investors love that now, having 4 years of visibility. Not many people can do that. But tell me something, you know, in order to capitalize on that and to keep that 4-year horizon, where are the opportunities for you globally?
We're focusing in Central America, in our home base, in Middle East, and also in Africa, East and West Africa, where new projects are coming on. And the assets that we have invested in, and the people, the PMT and the integrated project management team that we have are all geared towards capitalizing on these opportunities in these areas.
Shahril, great talking to Shahril Shamsuddin, the Sapura Kencana Chairman and CEO, joining us there from Kuala Lumpur, where they're based. Right.